I recently got a comment from one of you guys mentioning a really interesting and unique indicator called Echo by Lux. This tool literally attempts to forecast the future of the price movement by analyzing the data from the past. So in today's video, I will backtest this magic indicator 100 times with the goal to find out how effective it can be in different market conditions. For my backtesting, I will set my initial account size at $1,000 with 1 to 1.5 risk-reward ratio. For all the people asking me what backtesting service I'm using, it's called TradingView and it's officially the best backtester on the internet. Thousands of new and professional traders using TradingView to get an edge on their competition. The backtester is really easy to use. All you need to do is to set up your initial account size and the profit and loss per trade. TradingView will give you all the information you need about the strategy, such as the win ratio, the profit and loss, the profit factor, and more. You will also find some other useful features on their website, such as the position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they will throw in 4 pre-made high-quality strategies that have $100 value. So that's over $470 worth of bonuses all for free, but only if you sign up right now. TradingView has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Okay, for my backtesting, I will use the price of pound-yen on a 1-minute time frame. And now let's go ahead and search for our indicator. So the indicator is called the Echo Forecast by Lux Algo. Okay, so this indicator uses a simple time series forecasting method derived from the similarity between recent prices and similar dissimilar historical prices. The creators named this method Echo. This method originally assumes that future prices can be estimated from a historical series of observations that are most similar to the most recent price variations. This similarity is quantified using the correlation coefficient. Such an assumption can prove to be relatively effective with the forecasting of a periodic time series. This forecasting technique is closely inspired by the analog method introduced by Lawrence for the prediction of atmospheric data. Okay, now let's understand what this indicator consists of. So first we have the evaluation window, which is colored in grey and green. Next we have the forecast window. This window determines the forecasting horizon and is colored in orange. The total evaluation window is equal to forecast window and evaluation window. Next thing we have is the forecast mode. It basically determines whether to choose historical series similar or dissimilar to the recent price observations. We also have the forecast construction. It determines how the forecast is constructed. The forecast is this blue line right here. This tool can be used to forecast future trends, but also to indicate which historical variation have the highest degree of similarity or dissimilarity between the observations in the orange zone. If we take a look at the price action in the green zone, we can see it's really similar to the price action in the orange zone. Okay, now let's actually understand how to enter the trades based on this indicator. Okay, so after testing this indicator for a couple hours, I finally found one of the best ways of using it. So here are the rules for entering a short position. First, the price action must be touching the bottom of the forecast window. Second, the forecasting line must be pointing downwards. Next thing we need to do is to take the measurement tool for short positions and place a sell trade at the close of the current candlestick. Next step will be to place the stop loss at the recent highest price and set the take profit target at 1.5 times the risk. And if we have the forecasting blue line hitting a take profit target before it hits the stop loss, then we can actually enter a short position. We see the indicator predicted the future price movement really well. Exactly opposite is true for long trades. First, the candlestick must be touching the top of the forecast window. Second, the forecast blue line must be pointing upwards. Third, we take a measurement tool for long positions and place a buy position at the close of our trigger candlestick. We place our stop loss at the recent swing low and the take profit target at 1.5 times the risk. And if this blue line hits our take profit target before it hits our stop loss, then we can officially enter a long position. Also notice when the market is moving sideways, we don't usually have the price action touch the top or the bottom of this forecast window. And this is good because we don't want to be entering the market when the volume is low. And we see once the market started trending, the indicator gave us a sell signal. As we can see, there is plenty of room for the price action to hit at a profit target. Here is another example for a long trade. We see the price action is touching the top of the forecast window and the blue line is pointing upwards. And if we take a look at that measurement tool, we can see that the forecast is saying that we could potentially win this trade. And as we can see, this is exactly what happened. However, if you have a situation like this when the candlestick is touching the top of the forecast window, but the blue line is pointing downwards, in this case you would not take a long position, because the forecast predicts that the price action will more likely hit a stop loss. We see sometimes the predictions can be wrong, which is absolutely fine because we all know there is no strategy that would work 100% of the time. Okay, now let's do our backtesting to see how well this indicator performs in different market conditions. Okay, so after 100 tests, the win rate for this indicator is 58%, and we increased our account size by 137.71%. By the way, I found those 100 setups within 2 weeks. The profit factor is 2.07, and we had 9 consecutive wins against 5 consecutive losses. So these numbers are basically telling us that the indicator is doing an incredible job at predicting the future price movements. So yeah, definitely recommend this tool. Go ahead and backtest it on different markets and different time frames as well. Also, let me give you some quick tips on how to improve the win rate for this indicator to 70 or even 80%. First of all, I would definitely suggest adding a couple more indicators to the chart to confirm the entry. So here we have a really basic example of the indicators you can add. These indicators will help you better identify the trend direction. We can see when the trend is bearish, the candlesticks are red color, and when the trend is bullish, the candlesticks are blue. Also, we have a volume indicator on our chart that will help us identify the times when there is a high volume in the market. And the rules for entering a long trade wouldn't be that different. First, we need to have all the conditions I mentioned earlier met. And on the top of that, you need to have the trigger candlestick blue color. This indicates that we are officially in an uptrend, and the volume oscillator needs to be above the 0% level. Here's an example for a short trade. First of all, we need to have an indicator forecasting a winning trade. Next, the price action must be in a downtrend, and the volume oscillator has to be above the 0%. Obviously, this is just an example. You can use different indicators if you want. By the way, if you're struggling to find good ones, check out this playlist right here.